Good morning, everyone. You're up early. Thank you for being here. Last day of the World Economic Forum, not so easy to get up. Thank you to all my panelists to be here on time as well. We're here in Davos at the World Economic Forum, and we'll be talking about the future of finance, an exciting topic. I'm very happy about our panel because it's very diverse in terms of voices. We have the Swiss National Bank, we have the future of the CBDCs, which we will discuss. We have the Polish Regulation Authority, and we have Marcin representing the World Bank. So we'll be diving into traditional finance. We'll lay out the scene of where we're standing, where are we, what is the status quo, so everybody's on the same page. We'll talk about how are European countries, especially Poland, looking at that. We'll look into the future of the different blockchain technologies and cryptocurrencies and digital currencies. And we'll look into the investment side. We'll look into the financial inclusion, which is a very important topic. And we'll bring in some examples of countries like China. All right, Thomas, would you like to kick us off and tell us where are we standing? What is the status quo? What are the difficulties? What are the big risks? Where are we? Is it really that bad and gloomy like everybody is saying, or are you hopeful?
Okay, well, thank you very much. The big...
Maybe you can introduce yourself.
Okay, so my name is Thomas Moser. I'm an alternate member of the governing board of the Swiss National Bank. So you ask about the big picture in finance. So it's clear when we look at traditional risk, traditional finance, we just come through a year with inflation fighting and significant increases in interest rates. And traditionally, that has been one of the risks if you increase interest rates very quickly, that you have problems in the traditional financial sector, in the banking sector. There were some accidents, obviously, but overall, I think they had nothing to do with the interest rate increases that we have seen. So far, so good. I mean, one of the big issues that I guess are very much discussed here in Davos are the geopolitical risks and the fragmentation of the world economy that goes along with that. And I think this clearly has some risks in terms of the financial sector as well, this fragmentation. More specifically, if you look at the innovation and the developments, and I think we clearly see, on the one hand, the increasing digitization of financial services. So that's on the one hand in payments, it's very obvious. And when I say, by the way, digitization, I think the jury is still out whether this also means blockchain or not, because you can have a lot of digitization without blockchain. We see that in payments. Most countries have already introduced or are introducing instant payments, which means that the payment flows are much faster. This gives a new risk or an elevated risk to the banking sector because customers can withdraw their funds much more quickly than in the past. That's something we have seen. In the US, we have seen it with Credit Suisse to some extent, that the speed with which people can move funds has clearly increased. So that's one thing. And then if we look at the digitization of assets, I think that's something we more and more see with traditional assets. We see digital exchanges emerge. We have seen that already in the foreign exchange markets for quite some while. And that also means that we have platforms that allow you to trade with algorithms, and that clearly also introduces new risks in terms of operational risks with algorithms. It introduces risks in terms of cybersecurity. I think this is one of the big things to look forward with this increasing digitization. So let me stop here to have the discussion. I think these are some of the issues that are on our minds.
Thank you so much. Jacek, as the chair of the Polish Financial Supervision Authority, I'd like for you to come in and comment on that from the European perspective. I know Switzerland is in Europe as well, but it's a neutral player. So how do we in the EU look at that, and especially Poland? And maybe you can bridge us already to the new technologies.
So my name is Jacek Jastrzębski. I'm chair of the Polish Financial Supervision Authority. I'd like to thank very much the Atlantic Council and the Polish Development Bank, the BGK, for having me on this distinguished panel, and to be able to present some views from the position of the supervisor. And I fully agree with many of your comments regarding the traditional risks. So basically what we would like to say is the financial supervision is that, of course, we see many new risks related to the development and technology, but it's also fair to say that the traditional risks are not gone. And development of technology makes some of the traditional risks even more acute. like you mentioned, the impact on the development of payments and 24/7 access to banking accounts, which facilitates the transfer of funds and makes deposits less sticky, which we have seen in the States. The other factor is, of course, the current environment regarding interest rates. What we see, this may lead to some increase in the both liquidity risk and interest rate risk. We, as regulators, need to respond. And just to give you an example from the Polish market, what we have come up with last year is a new regulatory requirement related to long-term funding, which bridges the topic related to interest risk and liquidity risk. So one comment which definitely I would like to reiterate is that new risks emerge, but traditional risks are not gone, and we've seen clear examples in the global market. It's also related to the topic that despite some forecasts from before 20 years, traditional banking is not gone. So probably we'll come back to the topic later on, but we are still waiting for, as one of my colleagues at the authority, he likes to use his parallels related to the automotive industry. So to use his parallel, we are still waiting for the Tesla of the banking sector. So the traditional banks are still in a good shape, and even though they face competition from fintechs, most in the payment area, they are still strong. On the new risks, you have already mentioned geopolitical risks, which is of course very relevant in the case of Poland. We have a war in our neighboring country after the Russian aggression of Ukraine. Of course, the risk profile related to the geopolitical risk changed significantly. You have mentioned also cyber risk and operational resilience. This is very high on our agenda as the Polish Financial Supervision Authority. We are, as the financial authority, we are operating a cybersecurity incident response team, which is responsible for the Polish financial sector, and we have developed very good patterns of cooperation with the industry. That's also a topic that I would like to come back on later, because I consider this enhanced cooperation between the public actors and the private sector a very tempting alternative vis-a-vis further regulation. So maybe we are at the stage where further regulation or stricter regulation won't help that much, but they may make us lose the competitive edge. So I believe that better cooperation, more efficient cooperation, more flexible cooperation between public side and private side is a better route rather than more regulation. I would add one more risk that hasn't been mentioned before, and it is related to ESG. We consider the risk related to ESG more as a consequences of consumer behavior rather than regulation. So what we see is that regulations are a bit behind the consumer expectations, and what really drives the development are consumer expectations and consumer needs. And what we consider the major risk is there, of course, a risk of greenwashing that may appear, and also the risk of the ESG factors being to some extent, I'm not saying discretionary, but to some extent judgment call. And just to give you an example from the Polish market, have a look at defense spending. Is defense financing ESG compliant or not compliant? I personally believe it should be treated as ESG eligible, ESG compliant, but maybe there should be some internal distinctions or divisions. That's a matter that we have to look at. But mentioning ESG, I would just come back to the first statement that I made in the very beginning. Focusing on the new risk, we cannot forget about the old ones, because even the last year's development related to some of the US banks, they have been commented in a way that maybe some institutions, they have overly focused on new risks related to ESG, but to some extent they forgot about the traditional risk, and we have seen the consequences.
Thank you so much. We definitely have to come back to the enhanced collaboration of private and public partnerships. I think that's very important. Inga, I'd like to bring you into the conversation as this future voice. You've been in this space for 12 years now, in the digital space, in the blockchain. You were in the traditional banking before, I think.
Yes.
Would you introduce Fluency to the audience and also share with us your views on where you think this is heading? I know we've been through the crypto winter and summer, and right now nobody's talking about it because it's a little bit under the radar for everyone. So where do we stand in terms of the new technologies after you have introduced yourself and Fluency?
Thank you. My name is Inga Mullins. I am the CEO and the founder of Fluency. We are a software company based across 3 regions right now: the European Union, the United Kingdom, and the United States. And our primary focus is developing technology for CBDCs, both retail CBDCs and wholesale CBDCs. Personally,
central bank digital currencies.
Yes,
just for
I should have said that. Yes, personally, I have been involved in personal capacity with the European Central Bank, working with them, supporting them on the Digital Euro project over the last 2 years, as well as the Bank of England, supporting them on Digital Pound project. When it comes to the future of finance, in my personal opinion, the future has already begun. When you look at central bank digital currencies, back in 2020, we had only 30 central banks working on CBDCs, exploring them. At this moment of time, we have 130 central banks working on CBDCs, and out of G20 countries, 19 are already in advanced stage. Also from the 3Cs region perspective, it is essential to say that back in June 2023, the European Commission published a digital euro policy, which of course is still subject to parliamentary approval, but there is a significant amount of work inputted from both the European Commission and the European Central Bank onto digital euro, which will be, of course, affecting the Eurozone countries, but also the financial institutions that today issue euro accounts. So that's something that from the technology perspective is significant, simply as CBDCs brings completely new features when it comes to the legal tender, and then obviously needs to coexist with cash and some other forms of money, as long as they will be regulated, because from my point of view, we can expect regulations when it comes to stable coins, cryptocurrencies in the European Union. AI, of course, is gonna impact the financial services sector, which is, of course, the part of the forum over the last couple of days. Definitely the key financial players should start already working, getting ready, because obviously we all talking on different currencies, but we should also think about multi-digital assets. If we're gonna have a situation, we got digital pounds, digital euro, maybe digital Polish zloty at some point, there is multi-CBDC interoperability necessary to ensure that we can still get the best of the infrastructure when it comes to financial services, which impacts the speed of transactions, which impacts the cost of transactions, so automatically the end user.
Thank you, and thank you for bringing AI into this. I think this was the first panel in Davos this week where AI was not mentioned in the first 15 minutes. So we'll come to that in the next round. I would love to ask also the Polish authority, the Swiss bank, how AI will affect you going forward. But before that, I'd like to come to Marcin. Marcin and I shared this stage last year. In fact, he was the moderator, I was on the panel, and now we switched roles. So Marcin, now I get to ask the questions. Please come in and tell us, you know, I'm very passionate about the whole financial inclusion aspect, and you will comment on that. But before that, I'd love for you to lay the scene for us from the US, from the macroeconomics outlook. Please give us some examples on where we are succeeding in financial inclusion. I remember my time when I was working with Rocket Internet, a German venture builder, and we were launching companies all over the world. Africa was leapfrogging by far because they completely leapfrogged from going from nowhere to mobile phones. They didn't have computers as we had in the rest of the world, in the, let's say, developed world. So where are we now? Who is leapfrogging, and what is this leapfrogging? Where is it taking us?
Sure. Thank you. Let me start by introducing myself. Marcin Piatkowski. I'm a professor of economics at Kozminski University in Warsaw and lead economist at the World Bank in Washington, D.C., when I focus on promoting private sector development in China and Vietnam. What I want to do today with my quick, brief intro remarks is to make a connection between finance and development and why actually all of this discussion matters to our daily life and all the key challenges that we're facing in the world. And I want to make a connection with finance and 3I, which is finance versus investment, finance versus innovation, finance versus inequality. So the challenges that we, I think, need to be discussing also in the context of AI, supervisory boards, digital currencies, and the rest, how does it actually help us globally? the issue that we're having on investment. So the first I is that for all the talk that we're having, for instance, on the need to increase financing for the global green transition, we now know that globally we need more than $3 trillion per year of green investment, and we are not even 1/3 of a way there. So the big question to all of the central bankers, supervisory people, innovators would be, how can the financial sector and all this fintech that we're discussing actually help solve fundamental challenges to mankind or humankind, if we all agree that indeed climate change is a fundamental issue. So there's a $2 trillion plus gap in access to finance to support green transition. So that's a big question mark of what exactly can happen to mobilize all of these trillions of dollars, euros, francs that sit on deposits all around the world, and how can we use them productively. Second I is innovation, which brings me to an innovation in all kinds of roles, but also particularly in a role that matters for global development, which is the role of innovation in supporting labor productivity. For all the talk about AI in Davos, it's just an amazing hype. 2 years ago was all crypto. 1 year ago was all crypto, and we know where it ended up. I hope it won't be the same story with AI, inshallah. But for all the talk about this amazing AI promise, what we actually see in labor productivity growth worldwide is that it has declined. Last year, labor productivity globally was only half of the speed that we had before the pandemic. Only half, about 1.2% versus 2.5% before the pandemic. So what is going wrong? And I'm mentioning this because finance has a critical role in all kinds of forms, through banking, through startups, of actually supporting the very innovation that is needed to get back to the productivity growth that we had in the past of at least 2.5, 3% a year. In advanced economies, you would be surprised, last year labor productivity growth was 0.5% versus 1% before the crisis. So how can we use money productively to first of all, increase productivity because it matters for development, but also to use finance for, again, for instance, green innovation, in which we are seriously underinvesting. And quickly, the third I on inequality. Who benefited from Bitcoin? Did Bitcoin make rich people richer and poor people poor? I think that's pretty much the statement that we can make, and we would probably all agree. So the question is what is it that we can do to make sure that all the new technologies are actually not worsening global inequality, both between countries and within countries, but also the role, and then you asked me about financial inclusion, that it can have of bringing in all the poor people worldwide into the financial system. The good news is that over the last decade, the number of people worldwide that have a bank account increased from about half to about 75%.
Yeah, we disagreed on that in the beginning, but of course we have numbers. The statistics I know from the World Bank is, and I'm shocked about it every time, every third person is unbanked in the world. Can you imagine 1, 2, 3, you would be unbanked? 1, 2, 3, like it's insane. Of course, not in our developed countries, but in the developing countries, in the Middle East, where I lived for the last 10 years, maybe not in Dubai, but you don't have to look far. You know, Egypt, Indonesia, we mentioned in our conversation before. What are we doing, Marcin? How are we including those people into the society? How are we making sure we're making their lives better? I know innovation investment is super important. I mean, I've been in VC, so 100% agree with you on that. But how can we make the disadvantaged people, how can we include them?
So I would argue that it's now 1/4 of a global society, at least the data, the recent data I've seen, that doesn't have a bank account, but it's still 2 billion people. So again, all this AI talk, all this Davos bubble we are all in, and 2 billion people around the world do not have a bank account. The example that I think could be useful, and the example I know well, I've worked on China for the last 7 years, and it's an unbelievable example of a country that has leapfrogged a number of stages of technological development. Pretty much today, every single Chinese is banked, but not banked in a traditional sense of necessarily having a bank account, but banked in a sense that they can make all the payments, then deal with all financial transactions from savings to borrowing to spending from their phone. China even though it has a level of income of about 1/3 of Switzerland and 2/3 of Poland, so it's significantly poorer than everyone else, it's virtually has become a cashless society. The only people that use cash in China are foreigners and criminals. So I mean, probably it's usually most of the time it's not the same. But if you actually come to a store in China, you would be surprised that when you take out your cash as a foreigner, people just get panicky and do not know what to do with you. So I'm mentioning it as an example that indeed there are blueprints worldwide of how you can actually use even I'm not sure if it's a Tesla of a banking system yet, but how you can go beyond the very traditional banking sector in China, which is virtually all state-owned, and into a new realm where everyone is fully banked, just fully based on fintech and new solutions. And then indeed a blueprint that is indeed a blueprint for countries elsewhere.
It's very impressive. With China, we also mentioned before in our discussions how Indonesia is very advanced. Inga, would you like to talk about Indonesia briefly, maybe on that example? How have they managed to introduce digital currencies and include, let's say, the majority of their society?
So Indonesia definitely is one of those countries, emerging countries, where financial inclusion is one of the top political agendas at the moment. The reason is, of course, the way that they're structured with over 100 islands that they have around Indonesia itself. So including people in those type of countries is extremely difficult. This is exactly the reason why CBDCs has become the main topic of over 60 central banks around the world. Financial inclusion, including ensuring offline payments without any type of connectivity, whether it's internet connectivity or mobile connectivity at all, is the key feature of CBDCs, including the European Central Bank. Obviously, the European Union is very different when it comes to inclusion. The United States is very different. Probably you would be surprised, but it's actually definitely worse than the European Union. Poland is actually one of the most probably digitally advanced countries with some of the solutions such as BLIK, which has been introduced and is very popular in Poland, and also outside of Poland is actually one of the most impressive tools I've seen that people talk about also outside of Poland. But when it comes to digital inclusion, that's also something that we need to think about. CBDCs definitely will address the issues that you've just mentioned, will address the issues of Indonesia or the emerging countries. But at the same time, we need to think about elderly. We need to think about our parents. They definitely don't use iOS, iPhones or Androids. They don't know how to digitally pay instead of just using a card or maybe cash. So that's something that we also were discussing during the Digital Euro project at the European Central Bank Advisory Group to ensure that while some BDCs will be introduced, they will address all the end user groups.
I think you don't really need an iPhone for digital payments. I think Africa or also India, they probably have very, very cheap phones, maybe even locally made. And I mean, in Africa, you can pay for 2 tomatoes with your phone. In India, you can pay for your little chai with your phone. Or even I just read an article on the way to Davos that you can go to a guy who irons your shirts on the streets and pay this guy digitally. So Thomas and Jacek, why are we so behind in Europe on this? Is it because of our regulations? It's wonderful that we're so well regulated. Maybe Jacek, I'll start with you. Europe is famous for its regulations, but is this stopping us from advancing quickly? What can we do? Where are you looking at, and how do you think can we advance that? And yeah.
So first of all, I wouldn't agree that we fall behind, because actually I was happy to hear that both Marcin and Inga mentioned BLIK, which is the Polish payment standard, which was established initially by 6 of the Polish banks. Now it has become a very popular tool for payment initiation developed by the banking sector. And actually, it's a very nice topic or very nice case that can be used both for discussion on the relation between traditional banking and fintech in Poland. It can be also used as a starting point for discussion on what you mentioned related to financial inclusion or financial exclusion, because Poland is very advanced in terms of digital payments. We have a very high level of acceptance of NFC payment methods or any cashless payments. So we are very well advanced. And the question is, as you rightly mentioned, may this become some sort of a reason for financial exclusion? especially for those who are not natively digital. Because we can see that the popularity or the rise of popularity in digital channel may lead some of the financial institutions actually to limit to limit physical presence, to limit traditional channels, which then may lead to some sort of exclusion on part of certain social groups, especially older people or less technological savvy people. But I wouldn't agree with the statement that we are falling behind. If I look at the Polish financial sector, Polish payments, I'm pretty happy with the level of development I can see there. Of course, also other risks arise in connection with this digitization. This is related to also to the exposure of individuals to new types of criminal activity. We have the risk of unauthorized transactions, we have the risk of fraud, we have the risk of data theft. That's also something that we as the supervisors are looking at, how to protect the most vulnerable groups in the society against these type of new risks that are connected to online access to funds.
Yeah.
But coming back to regulation, you mentioned are we overly regulated, and probably this is a topic that probably will be returning on. I believe we have reached a stage of regulation, as I said in my previous intervention, where further regulation, I mean the incremental value of further regulation is declining. So I would rather be looking at other types of supervisory or state activity other than coming up with a new set of more detailed regulation. I don't think it does really serve the purpose, but I'd be happy to elaborate further.
It's interesting. I don't know about you, but every talk I went to here in Davos, be it with Sam Altman, be it with Alex Karp, CEO of Palantir, everybody talks about how slow we are in Europe due to the regulations we have here. So I agree with you. We pay attention. We take our time. The EU AI Act took 3 years to be written. It's going to be taking 3 years until it's implemented. I don't say that we're falling behind, but I just think it slows us down on the global arena. Most of I think what is Alex Karp quoted yesterday, 84 of the startups in top 100 are from the US. I would love to see more European, Polish, Swiss startups in there. And I know Poland is very advanced. I think half of the OpenAI developers are from Poland. So Poland is doing very well on that side. I just think what happens often is that people go to different countries in order to make things happen. And that's unfortunate. I wish we could keep them in Europe, to keep our talent here, and that our governments would allow us to innovate quicker. Let's come to Switzerland, Thomas. I know you wanted to comment on China earlier as well. We spoke before we came on the panel about your personal experience in China, about your personal experience, how you really believe in digital currencies as well. Where do you think Switzerland is moving faster? Would you like to comment on that?
Let me start in Switzerland. I would agree with you. Switzerland, in terms of payment, we are behind. We were clearly not as fast. I think one reason here was not regulation, but was just that the legacy system was just too good. I mean, there were not a lot of pain points. You can pay with debit cards, you can pay with credit cards, you can pay with cash. Cash is still available. So I think the pain point was not very high. We are just in the process of introducing instant payments. We have iPhone or smartphone payments are just taking up very quickly. But I think we were a little bit behind there. Where we are not behind, I think, is in terms of DLT, blockchain applications. We have in Switzerland this famous crypto valley, the Ethereum Foundation is here. I think there we have a very helpful regulatory environment. We also were, I think, the second country in the world that had a DLT legislation. So a very clear regulatory and environment with a lot of legal certainty for startups. I think what we do in Switzerland well is actually attracting people, including from Poland. So it's not so much the Swiss often, but it's actually exactly what you said. The people come here to Switzerland because the regulatory environment is so positive for innovation and for especially DLT applications. So we very much benefit from all these startups coming to Switzerland. In terms of the Swiss National Bank, I think we have also been benefiting from that. We are not working on retail CBDC. We have said that we do not see a use case in Switzerland at this stage. But given that we have a digital exchange already in Switzerland, fully licensed digital exchange working since more than 2 years, We have just started a pilot in December where we issue a wholesale CBDC on that digital exchange, so that we have a live wholesale CBDC until mid of this year, and then we have to conclude how we proceed. In terms of China, so you mentioned my experience. I was last year in Shanghai, and I've been talking with Marcin about the retail CBDC in China. So the retail CBDC is out. My experience was you can get a wallet, you can get the retail CBDC, but you cannot pay with it because people do not accept the retail CBDC, and it's interesting to see that. So none of the taxi drivers or of the little merchants wanted to have the retail CBDC. They all wanted to have WeChat Pay or Alipay payment. Certainly they don't take cash anymore. So one of the theories, or one of the things I was told, is that these firms usually have a loan from Alipay. And so they want the firm to see the income that they have, that they get better conditions on their loans. So I think it's a very good example of how the private sector can bundle services in a way that the central banks cannot, or at least doesn't do. So there are a lot of advantages of private sector firms in retail payments, which I think makes it clear that central banks have to be very carefully think very carefully about adoption, that it doesn't happen to them that they issue a retail CBDC that no one uses, which would be, I guess, at least a reputational problem for central banks.
Thank you. It's a really good example. And I mean, I wonder, I don't know, of course, if that's really true, but I wonder if it's a question of trust as well. Do people trust new companies more than central banks? No, we don't have to answer this question on this panel, especially on camera and on record. But, but Marcin, I'd like to come back to you and for us to talk more about what you mentioned before, this enhanced collaboration of private and public partnerships. Could you expand on that? How can we get there? How can we build more trust? How can we actually bring the banks into that so people trust Alipay as much as they trust central banks in China?
I think what was just discussed about China, what Thomas has said, I think it's very useful because I followed the example of the introduction of central bank digital currency in China. And a few years back, when the Chinese central bank announced digital currency, there was a flurry of articles around the world about how digital yuan will monopolize the world. None of it has happened, not even in China, as we have heard from Thomas. So I think it's really important to understand that. I think that one issue with digital currencies indeed is a user case. Why would you actually need it if you can already pay with a credit card, with WeChat, with Alipay, with debit card, and whatever have you, with face recognition, which also China is, by the way, experimenting with. So it's sort of difficult to make a strong case of why it should happen. But I think I'm not sure it's exactly a matter of trust in terms of whether we trust the central banks. I think the Chinese trust their own central bank. Polls trust the supervisory authority, and I'm sure the Swiss trust the Swiss central bank. But I think it's a matter of feeling that all of your payments by definition are 100% surveyed, are visible to the government. And some people in various countries feel uncomfortable with knowing that the government that already knows so much about their lives would know much more. Even in countries that are with sort of less open political systems, I think the privacy issue is a big thing. So it's not necessarily trust. I think it's a privacy issue. People somehow feel more comfortable with sharing their data, also for pragmatic reasons, with digital providers such as Alibaba and others than with the central authorities. That said, I think it's useful for all, you mentioned at the beginning, there's 120 countries now around the world experimenting with digital central bank currency. Let them experiment. Let's see exactly what happens. Maybe we'll come up with a user case. So far, we have largely failed, not only in digital currencies, also in Bitcoin. Many of you in the audience might know the experiment in Salvador, when the president of Salvador made Bitcoin legal. That has also failed. I think for all kinds of reasons. So I think a big question for our discussion today and a follow-up discussion is how can you make fintech truly productive, going beyond Revolut and sort of instantaneous payments that can really affect the things that matter, such as financial inclusion, development, climate change, and others. Thanks.
Yeah. Privacy, but also I think speed. You know, the startups, the companies that are small or even that can be bigger as well, like TransferWise and others, they can just move faster. They can give you loans faster. I mean, that's the whole point why microlending came up as well. Inga, I'd like to bring you back in as well and to comment because you are in this fast-paced environment. I know you spoke a lot about it already, but what is the future? Where are we heading? Where do you see us in Europe, but also globally in 10 years from now?
Definitely.
Also, there will be questions for the audience. Please get your questions ready after this one.
Definitely, it's refreshing to hear us. We had the chat just before our session that we separating crypto from the technology itself. And I think this is essential to say that blockchain is not crypto. Crypto is an asset. Blockchain is the technology which can be used in the future of finance for different purposes, including cybersecurity. Blockchain has massive benefits which has been undermined by bad marketing. That's my personal opinion from what I'm seeing. I think in the end of the day, we cannot put everything in one basket. And same is with AI. Exactly. Surely we'll need proper regulations, and there is a lot of work needed, including collaboration with the private sector, so between the central banks and the private sector, to ensure that all the tools related to the future of finance work. And in the end of the day, they address the end user needs. So this is really essential. It was refreshing being part of the Digital Euro project, seeing market advisory group, because over the last 2 years, all of us were advising them of how we believe from our perspective, the technology firm's perspective, the end user's perspective, the private sector on the intermediaries' perspective, what should be addressed. And that has impacted the design of Digital Euro, which also impacted Digital Euro policy. So I know this is not as maybe famous at this moment of time. There is still so much more communication required when it comes to Digital Euro and Digital Euro policy. Nevertheless, from my perspective, being involved with different CBDC's projects, I see the European Central Bank and that particular project one of the most advanced, also on the technology side, because it's very different to the one in Nigeria, it's very different to the one in Ghana, in Bahamas, and has a purpose. That purpose is ensuring that the transactions are seamless, also between the wholesale CBDC and retail CBDC. And wholesale CBDC, as we've mentioned in China, we have Enbridge project, which is pretty much successful. That's a cooperation cross-border across the Hong Kong Authority, China, Thailand, India, United Arab Emirates, and most recently Egypt, and ensuring that we have that seamless bridge without two types of systems in each central bank. So two types of fees that in the end of the day are going to affect the end user, the speed of those transactions, that's something that we've been focusing on.
Mm-hmm. Are there any questions from the audience? Do we have a microphone?
I can walk around. I can do my steps today. Yes.
Okay, so let's start with Kasia over there in the 4th row.
Thank you. Also, a little bit of stretching. Hi, my name is Katarzyna Hanula-Bobit. I'm head of policy for Positive Money, which is an organization that works on monetary policy. So we also work on Digital Euro. So my question, we are digitalizing, right? So everybody's digitalizing. And the only form of public money is cash and coins, right? With a legal tender. So it's the only safe things in the world. So right now, the CBDC and the Digital Euro make sense because we're kind of moving this to the digital and we're providing this as utility of a public money in the digital sphere. You are telling that it might not make sense because of the privacy concern and because there are already private sector. 2 questions. From the financial stability point of view, if we're giving too much leverage to private sector, we know how it's ends. If we don't have deposit guarantees, then deposits are actually the private money, right? That's are being there. So does it make sense from the financial stability to have Digital Euro? And the other question, is the Digital Euro with privacy something that cannot happen? So like the complete privacy as the cash as a legal tender. Thank you.
Is this for somebody in particular?
Whoever wants to take it.
Who would like to take it? Thomas?
Okay, I can start. So absolutely, absolutely true. We need, I think we need central bank money for secure settlement. I think the open question still is, do we need it at the wholesale level, or where I think clearly need it, or do we also need it at the retail level? And I think there people disagree whether we also need it at the retail level. But some form of central bank money as the only really riskless monetary asset is needed in the economy, absolutely. And then the question, as you said, if we move towards a cashless society, as you said, the only access that the broad public has to government money is at the moment cash and coins. So I think that's a fair question. But there are a lot of issues involved, including what does it mean for the banking sector if central banks issue retail CBDCs. And I guess you know this discussion. So I think this is an open question. On privacy, I think this is a very interesting point. And we had at the Swiss National Bank a project called Tourbillon, where we show that it's possible to have the same level of privacy for the payer as with cash. So total anonymity, the report has just been issued in November. So it is possible, but it's difficult. So it's technically challenging, but there is cryptography available to make that happen.
Maybe I will answer the second one based on privacy, because that's something that I personally have been involved with. I think it's essential to separate privacy from anonymity. Anonymity is something that obviously people would like to have, and in the end of the day, anonymity is not something that we even have today. Let's just look even from the privacy perspective of our today's transactions in the current traditional banking system. All our transactions are tracked. Even if you think that you use NFC and somebody doesn't see this transaction today, even if you're using, I don't know, Elixir in Poland and so on, or Blik, all of those transactions are tracked. So we feel we have greater privacy today that we'll have with CBDCs in the future, but in all honesty, from the technology perspective, there's no difference whatsoever. However, from the European Commission perspective and the European Central Bank perspective, offline payments will be able to give you that privacy. To the stage that obviously you're gonna have a limit. From what I'm hearing, it will be about 3,000 euros limit on the offline side as well, so actually much larger than NFC payments today. But your transactions will not be tracked. It will be between two parties and that particular moment of time, and that's the communication, the official communication from the bank perspective. So is privacy at the heart of the project? It has been from the early beginning. We wanted to make sure that there's no difference to the way that privacy is treated today. Nevertheless, there is also a separate project conducted by the European Commission related to the centralized identity, which I believe in the future will be combined with CBDC's platform at the ECB.
Jacek, would you like to comment as well? You don't have to. We have more questions in the audience.
A very short comment. I would like to reflect very briefly on the first part of your question related to state guaranteed deposit. Indeed, as you said, recent times have shown that there's actually no viable alternative to state guaranteed bank deposits, and that's also one of the reasons why I could say in the earlier part of my intervention that traditional banking is not gone. That's the consequence of having this safe haven and no real alternative to guaranteed deposits. That's also what we've seen in the States, where the state guarantees was de facto extended to non-guaranteed deposits. As far as the impact on the CBDC on financial stability issues is concerned, we are not that far in these discussions in Poland as far as CBDC is concerned, but definitely it may change the landscape significantly if it provides potential customers, if it provides the society with yet another safe haven other than state guaranteed bank deposits. So in this connection, of course, it depends on many parameters, on the limits, on the thresholds, how you design the access of retail customers to CBDC, but it may be relevant in the context of providing yet another safe haven, because now what we see, of course, on the deposit markets is even if there is a run, even if there are liquidity issues in one or more banks, the money generally remains in the system. Having another alternative would change the picture, or could change the picture.
Marcin, you would like, or shall we take another question from the audience?
Just one comment on, and these experts know so much more the answers than I do, but just one point on user case for digital currencies. One thing I liked a couple of years ago when China's bank announced digital currency was the idea that we can fight recessions by virtually forcing people to spend by giving them digital currencies on their phones, which I thought was a useful idea. The usual problem for macroeconomists, the macro management of the economy is when you're in a recession, you want people to spend. And you cannot force them to spend. You can lower interest rates, but they can still refuse to spend. So what you can do, you can give them digital currency, like $100 on their account, with an expiry date. So you have to spend the money by the end of March. And it sounds kind of very useful because in a sense, yes, a lot of people would go out and spend the money, otherwise they will lose it. But apparently this has not worked in China. You could argue that China now has a deflation, so prices are decreasing, not increasing, and you would think there's almost a perfect macro case for using digital currencies to support consumption, but for some various reason it has not happened. So I just leave a question mark that we have to work more about the connection between digital currencies and macro management.
Very interesting. Do we have another question? Okay, perfect.
Another Kasia. My name is Kasia Lasota-Heller. I'm regulatory focused attorney, but more importantly, I'm president of Swiss-Polish Blockchain Association. I had already the pleasure to have Thomas on our conferences, and last time in December, I shortly met President of Jastrzębski, and I have a question in relation to MiCA. As MiCA is on the way, and MiCA is the market in crypto asset regulations, which will require all of crypto assets providers outside of Europe, if they want to provide services in Europe, to be licensed in Europe, shortly explained. And my question firstly to Mr. Jastrzębski is, would you imagine that Poland will be like a fintech hub trying to attract companies from third country, let's say from Switzerland, to go for the license in Poland in order to passport it for the whole Europe? And to Thomas and to Inga, Thomas, you obviously from a public sector, not privately, but you see use for Swiss companies, use the possibility to go to Poland instead of Germany, France, and to Inga, which, let's say, Indonesian company will choose Poland to get the license in order to be active on a European market. So that's all.
Jacek, would you like
Thank you very much for this question. Indeed, MiCA is one of our top priorities for this year. The implementation of MiCA in Poland. To answer your question briefly, I don't think we have the ambition or we have the goal of becoming a hub for crypto assets or cryptocurrency or any services related to crypto assets. And I'd just like to iterate that I couldn't agree more with the statement made by Inga before, that we want to separate the technological side from the asset side. So we see, and this also goes back to one of the comments made by Marcin before, that sometimes we need to separate the technology and from the value that's related to it, because we have some projects that are, let's say, magnificent in terms of technology. They are really impressive, but the value related to it is, let's say, doubtful, or it may not be exactly what people would expect. So we have, to be honest, we have no real ambition of becoming like the real hub for crypto. We've been dealing with the regulation, and there is, as you know, there is this transition period in the MiCA regulation. How we see this transition period structure in Poland and in some of the neighboring countries, we may expect some inflow of crypto-related businesses to Poland, but it's more related to the transition periods, how they are structured in Poland under the grandfathering provisions of the MiCA, rather than part of our, let's say, strategy of becoming a crypto hub for Europe. So to answer your question very in brief, that's not part of our strategy. We try to focus more on promoting other use cases of blockchain rather than crypto. We have seen some examples in the Polish market related, for example, to e-voting system in the stock exchange. So blockchain can be used as a tool for safe, secure, and private voting systems. So we'll be happy to explore options in the field of cybersecurity. We'll be happy to explore options in the field of consumer protection, of providing consumers with the product information with the use of DLT technology. So that's something which we'd like to foster and to support. Crypto, not necessarily, of course, we'll be complying with the regulation. We know we need to afford to the customers the level of protection that the European Union has decided to provide, but that's not our strategy to foster or to anyhow develop Warsaw or Poland as a crypto hub.
So access to the European market, of course, is very important for Switzerland in general. So not just in the crypto space, and there are currently again negotiations on the way. So I guess the first line would be to try to get access to the European market from Switzerland. If that's not possible, it's hard to say what firms will do. Usually the easiest way from Switzerland is to go to the Principality of Liechtenstein to get access to the European market, but I guess it's a very small place. So I hard to say, but I guess, but it's an important issue.
And from my perspective, talking about Indonesia, I don't truly believe Indonesia will be ever interested to actually operate out of Poland. They're much more focusing on the Asian market when it comes to cryptocurrencies. Nevertheless, I understand the underlying reasons for the policy limiting influence from abroad, so that you don't have situations as you have had in Poland and other Eastern European countries, setting up offshore headquarters in Seychelles or British Virgin Islands, and then suddenly your accounts are hacked with cryptocurrencies, your money get lost, and nobody can even track it. So on one hand, you require from a regulator that you will be protected, but on the other hand, in order for them to be able to do that, they need to be able to apply this to the companies registered nationally. And obviously, every single jurisdiction has different regulations, which I believe are very important. If we want for crypto to be treated seriously, we need to definitely focus on cybersecurity and ensuring that its reputation perceives itself. But as I agree with you, and we had that discussion, it's refreshing to see that blockchain is treated separately, because I know there are a lot of talented engineers in Poland and elsewhere in the Eastern Europe, which are focusing on blockchain technology impact on cybersecurity, identity management, and so on, but maybe not necessarily on cryptocurrencies on their own.
We have time for one more question. While you're thinking, I'll comment on that. I strongly hope that we are treating that separately. I remember back before the pandemic, I was working on the blockchain strategy with Dubai, and we really made it very clear that it's not about crypto, it's the blockchain strategy. It's about making all government transactions paperless. I don't know if we have any efforts like that in Europe, but the idea was, let's put all government transactions on blockchain, so you don't have to come with your printed papers to one authority, go to the other. Everything is on blockchain. I mean, that for the health sector would be incredible as well if it's global. Imagine you don't have to actually remember what you have. Everything could be on blockchain. It would be such a benefit for the consumer. And talking about the benefit for the consumer, if there's no other questions, then I will go again. I actually would like to bring AI into this and see how will artificial intelligence affect the future of finance. In 2020, during the World Economic Forum in Davos, we spoke about AI a lot, if you remember. It became such a hype, and then of course the pandemic happened and our focus shifted. Then, like you said, Marcin, the last 2 years was all about crypto. This is over. Now we're back to artificial intelligence, and I think this is not a hype anymore. This is real. If you see Sam Altman speaking everywhere, we are all probably using ChatGPT. Where do you see, are you implementing AI already for productivity within the Swiss National Bank, or making the finance maybe more customized for your customers? How do you see the future of finance with artificial intelligence in it?
It will clearly play an increasing role, and yes, we are using it, like most banks actually, for fraud detection and prevention. So that's where AI is already used for quite some time. And then I think in terms of algorithmic trading, it will play an increasingly important role. But there, I think, as Marcin said, it will probably take a while until we will see that in the productivity numbers. I'm old enough to remember the internet being introduced. And I think the same puzzle then. So for a long time, it was kind of like with blockchain, it was some nerds doing something, and then suddenly it became commercially important. And then again, it took about 10 years until we could see something in the productivity numbers, because it takes quite a while to adjust all the processes to make it really productive. And I wouldn't be surprised if we see something similar now with both with blockchain and AI.
Yeah, the internet was quite a big moment in our lives, but considering everything is moving so fast and so much more exponentially now, I think AI can become part of our lives much quicker than the internet really did. What are your thoughts, Inga?
Definitely AI has a purpose when it comes to the future of finance. On the other hand, the way I'm seeing this, it's a dangerous tool, and we need to be careful when it comes to data management and especially banking systems. So I think regulation is the key here to ensure that our data, our money will be safe with AI. And then again, when we look at the policies and blockchain, including CBDCs with the influence of blockchain, I think the introduction of digital euro policy is refreshing because we can at least see which way this is heading. And the utilization of DLT on the wholesale side, which we've mentioned before, I think is essential, especially when it comes to interoperability, which has applications across different disciplines, not only finance, including pharma, for instance. It has the same on the cybersecurity side across all the disciplines. And it's the same with AI. I think as long as this will be regulated and there will be a limit, definitely has a purpose and can tremendously improve the processes on the user data management, on the cloud management, and many other purposes that probably we don't even hear about of AI today.
How about you, Jacek? Are you implementing AI already in your internal services?
Not yet at a large scale. But I would like to briefly come back to the blockchain topic just for one sentence, because we also see these potential benefits, as you mentioned, in the health sector, in the government, public services, in authorization, authentication, identity management. The question is, however, why it's not developing that fast as we have expected? Because we've been talking about this, the potential of blockchain for probably 10 years now, or maybe a bit less than 10 years, but still we haven't seen that prominent, that spectacular use cases as we expected that there should be. So of course, we as the financial supervision, we have certain programs dedicated to the support of blockchain technologies. We have the blockchain DLT sandbox. We support DLT sandboxes. We support them in our innovation hub. But for some reasons, and that's an open question, for some reasons we haven't seen that spectacular use cases like all of us probably expected some years ago. And now I move to AI, because this is also a valid question for AI. Will AI follow, or will AI provide us sooner with spectacular use cases that will change our world? We believe that we are still ahead of a proper, let's say, impact assessment of the AI. So we definitely recognize it as a very sophisticated, potentially very useful tool, but also a source of certain risks, and it has also its limits, because what we see now is that AI is very spectacular, it's impressive semantically. Semantically, it impresses us a lot. However, in terms of the content produced, it can be biased. So depending on the input data, you can achieve different results. So there are some risks inherent to it, and so we definitely consider this a potential revolution, but whether it will become a real revolution, it's yet to be seen. It can be similar to the impact of introduction of the personal computers. So from the market's point of view, the impact on the markets can be potentially that the markets will become much faster, much more interesting, but also much more volatile. So it may significantly increase the volatility of the markets, and also the risk related to this volatility for market participants. And one maybe general comments on the approach to regulation in the field of new technologies, and the open question that you asked, why is Europe sometimes perceived as being behind? I think that's to some extent related to the, let's say, acceptance of risk or risk-averse approach in the society. So what we see is societies with a higher level of acceptance of risk, that are not that risk-averse, they tend to be more innovative. So that's sort of obvious observation. But this brings me also to the conclusion that if you want to make our societies more innovative, then we need, I have the expression that we need to build some culture of acceptance of risk. And now what we see, for example, in the European regulations as far as consumer protection is concerned, is that some parts of these regulations virtually want to prevent the customer from taking any risk, or make the risk very difficult to be managed by service providers, which means that they are not able to offer services because of the level of, let's say, legal or consumer protection risk. So maybe the answer to this question lies in, let's say, maybe some educational approach, or some, let's say, change of the mentality, and some the introduction of some culture of accepting risks and of taking the risk and staying with the cost of the risk.
Yeah,
Because
this was
if we don't move this direction, then it may be quite difficult to foster innovation, because innovation per se means higher level of risk, and this is the, let's say, the other side of the story.
Yeah, this was excellent. There's so much in it. I'd love to unpack so many points in what you just mentioned, because I'm passionate about many of them, but we are running out of time. Marcin, I would say this is your closing remarks now.
My closing remark is that if I wanted to be fully involved in finance, I would put a big slogan above my door: finance for the people. What I mean by it, that whatever we have discussed today, we cannot have a loose sight of that finance is only a means to an end, not an end in itself. We're doing all of it to make people richer and happier. So in all of the discussion about AI, fintech, blockchain, we always have to think, how does it affect what really ultimately matters? The investment, the green transition, the innovation, the labor productivity, the inequality, the financial inclusion questions. I think in terms of AI, I hope we are right that all these aspirational stories that we tell ourselves, including in Davos, they truly translate into reality. I trust and I agree and I hope that Thomas is right, that indeed AI will be like the internet, that will just take some time for the big productivity boost to happen, and a boost not only to productivity but also to our quality of life. I'm actually surprised by the number of serious people that think so seriously about AI, so I hope they are not wrong. And indeed, when we meet in Davos 10 years from now, we'll be like, yes, this discussion marked the historical breakthrough when AI really started to affect our lives in real way, which when you register for events in Davos is clearly not the case. So going back to the big point, yes, there's so much for finance to do, and let's not lose sight of what ultimately it is for. It is for helping our lives, making us richer, not necessarily Switzerland. I don't think Swiss is necessarily that needs all this growth, but we have all these billions of people around the world that need finance in every single way to make their lives richer. In all of these discussions, I think this angle is super important. Thank you.
Well, I think Thomas and Sam Altman and I agree as well that this is a big moment, as big as the internet, if not even bigger, but at least as big as the internet. Thomas, would you like to make some closing remarks as well? And then Inga, and then we'll have to close this panel. So just 30 seconds.
The closing remarks of Marcin were absolutely good, so I have nothing to add to that.
Inga?
Pretty much the same. The end user is the most important, and what I would love to see more is collaboration, because then we'll have a greater understanding of what AI is, what blockchain is, not crypto is, and so on. Thank you.
All right, well, thank you so much to our panelists. I really hope this was interesting and you learned a lot from this. You see there's a difference between crypto, blockchain. You see we're very hopeful, very optimistic. We believe in AI. I think myself that AI will really make a big difference. And I hope not 10 years from now, but let's hope next year we'll come together and see the change it has brought, not just on the productivity, but also on the way of including more people in the society, creating a more equitable future for all of us. And and giving us maybe more time for creativity, as they say, so we can focus on what really matters. All right, thank you so much, everyone. Thanks to my panelists.
Thank you.
Thank you.